Morning, everybody. It's the 12th of July. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning
How you doing?
on this sad day.
Indeed.
The day after, the night before.
Yeah, very sad indeed. Don't want to talk about it really.
Well done, Italy, for winning
Yeah.
Euro Championships. Unlucky England. Better luck next time or next year when it's coming home from Qatar in a nice Christmas present. So yeah, got that to look forward to. But we'll give everyone a rest. Everyone's ears a rest now about it coming home.
Yeah. Let's just talk about the Olympics now.
Yes, yeah, definitely. No spectators for that, is there?
No, there isn't. It'd be a bit odd, but we've all become used to that, I guess. Okay, let's crack on. Headlines over the weekend. The ECB President Christine Lagarde has told investors to prepare for new guidance on monetary stimulus in 10 days and signalled that fresh measures might be brought in next year to support the euro area economy and that the current emergency bond programme will end. She also expects the ECB's plan will run to at least March next year, so that will give markets a little bit of a boost, although a bit of a mixed start today, as we'll come on to shortly. Prime Minister Boris Johnson will warn people to remain vigilant as he prepares to lift virtually all remaining coronavirus restrictions in England. He's got a press conference today and is widely expected to confirm that mandatory curbs will end as planned on the 19th of July, which is next Monday, which is being dubbed as Freedom Day. Even though infections have risen sharply in the last week, but importantly, hospitalizations and deaths haven't increased, which is, of course, good news and signs that the vaccine is doing its job. In the US, the Treasury Secretary Janet Yellen will press European officials in Brussels this week to reconsider their plan to propose a digital levy after securing the Group of 20's endorsement for principles of global corporate tax agreements. So wait and see what happens from that. And outside of markets, we've got billionaire Richard Branson's long-awaited test flight to space, taken alongside 5 of his Virgin Galactic Holdings employees, which is set to blast off. And obviously that will open the way for Jeff and his team, the rocket made by Blue Origin. So excitement, I guess, on that front if you're into space travel.
Yeah, pictures
Fancy it,
were
Steve?
pretty cool. No, not really. No,
Not for me either, if I'm honest. I'd just like to take a fucking flight to Spain at the minute. That would do me.
Yeah.
Okay, right. Getting into some charts then, Steve. Where do you want to start today?
We'll start with the indices. Obviously, we're in this bullish uptrend. US markets are sort of like posting new highs. European, we're pushing higher, but seem to have enough resistance around here at the moment to hold on. Looking at the FTSE, we're just above the 78.6% fib retracement. 72.15 is the high. We're trading a bit lower this morning, as you can see in the last hour. We've had this bit of a sell-off, just an early morning sell-off. I don't think there's anything to be too concerned about so far. DAX has seen the same bearish outside candle forming on this hourly chart, so potential for a little bit of a move lower, but I'm sure the US will come to the rescue. This is NASDAQ, all-time highs, not very far away, maybe 100 points away, and Dow Jones, potential for a double top forming here, but this is only on an hourly chart, remember, so it's only short term, but we would need to break below 34,100, so can't see that happening anytime soon. But again, this last hour we've seen prices come back. Obviously on the daily chart on the Dow Jones, potential for a treble top at some point. That needs a break of 33,000. China 50, the one to watch for me on these indices front. A break of 16,438 would be a significant break indeed. And we're in this, we got this downward trending resistance line, which is looking pretty strong. This is a daily chart, and I believe China 50 will lead the way. Let's look at the commodities. Oil's had a bit of a pullback from the after the fifth wave final fifth wave was confirmed. We're in an ABC correction. Unless we do get a break of the 76.80 level, and that maybe we'll see an extended fifth wave. But at the moment, on after last week's bearish candle, real sign of indecision on the weekly chart here. After the previous weeks as well, so momentum stalling. So I think we are in for that correction. And if we look at the 4-hour chart, we could have seen the first leg of it, and we're waiting for the second leg. So yeah, really needs to get above 74.26 to worry the shorts in the market. And if we get a break below the $70 level on the WTI crude oil, we should see an extended move lower. So be careful with that one. Gold is finding support at the 1790 to 1795 level. I think on the intraday, we're looking to buy a dip around this level. Breaking back below 1790 would be bearish for me, and look, that 1750 would come under threat quite quickly, I believe. And let's move across to cryptos. Bitcoin still really trading sideways in this sort of descending. Well, it is a triangle formation, really. We can see on the 4-hour chart something like this. So are we going to get a break? Potentially. Really needs to break above this. For me, I'm bearish on it overall, but if it gets above 35,000 and then it even threatens the 36,500 resistance, then a return to 41,000 wouldn't be too much trouble. But really, looking at the support, breaking the support is the way to go for Bitcoin. I think we might see it this week as well. Yeah, that's me, Joe.
Short and sweet. Okay, so dollar index, let's have a quick look. Not much to speak of, really. A couple of days of decline. Seem to have found some support around about 92.00, so expecting that to do a bit of a job maybe. If that slips, then we could head down towards 91.43. Overall, I think the bias remains bullish towards dollar index for now, and obviously that will have an impact on everything else. Looking at euro dollar, that's had a nice bounce from this support here at 117.81, which is bang in line with this neckline on the daily chart. So still hasn't completed this head and shoulders, but it's getting mighty close. We could see a little bit of a rally higher or a correction to the upside, but I do think we are going to see another challenge of this zone here in the coming days and weeks. So I think this is probably just a temporary move to the upside, if I'm totally honest. Looking at some of the other riskier assets, we've got Aussie US dollar. For me, this has completed the head and shoulders top. It probably did it here on the 18th of June. We saw a bit of a retest higher. We got back above the neckline, but then the sellers stepped back in and we've seen it continue to move lower. So very much trending lower on the daily chart. Yes, we saw some bullishness posted on Friday and an engulfing candle actually formed, but there wasn't really much uptick in volume to accompany that. So therefore, I think we are set to see lower prices. And now we've got support there at 74.09. If that's taken out, then we can start thinking about this level down here, which is at 70.57, which is the measured move of the head down to the neckline projected lower. Looking at cable, sterling sort of perked up a little bit last week on Friday. Still very much range bound for me, so not really any clear indications of how to trade that at this moment in time. Still concerned about this potential double top forming, and again, that's going to be linked to dollar strength. So for now, not really much going on there for me. Going to be quite difficult to trade, I think. Dollar Swiss, so dollar has sort of stepped back a little bit, and we've seen the Swiss franc strengthen a touch, but we've got some support down here at 19.53 to potentially target, and I think buyers will be willing to step in around about that level. Dollar yen, quite interested because we've seen sort of yen step up as a bit of a safer haven in recent days, even though the trend still remains higher there. We have seen a break of trend last Thursday, so maybe a bit of a retest in and around this zone to potentially target some fresh shorts if you were looking at playing that to the short side. That's pretty much it in terms of what I was looking at on the currency side of things. Just a few charts to start the week, and we'll see what the rest of the week brings, I guess, for a bit of further direction.
Excellent. Thanks, mate.
Okay, go to the head trades from Friday. Unfortunately, not much positive to speak about. We had two trades, as we always do, but they were both stopped out. So I went short of Aussie yen. It wasn't a 49, so 4,900 stop loss, pip loss. It was 49 pips, 1R, and Stevie lost 40 ticks on the DAX for a 1R loss as well. So nothing particularly great to report of. Let's get back on the horse. What are you fancying today, Steve?
Well, there's a couple of things that really grabs my attention. I think oil is still a little bit under pressure. On the 4-hour chart, we've seen some negativity over the last 12 hours. This is the sort of thing I would look at on there, sort of 2.5 to 1 risk reward. That's one idea I was thinking. From the gold side of things, I think it's a little bit in the middle. So, would prefer to be buying somewhere on a dip in front of the 1790 level, targeting a move back up to the sort of 1820 level, around about there. It's around about 2 to 1 on there. But the one I'm going to go for is Bitcoin. I'm going to sell Bitcoin, getting short here. And the stop would be, as I mentioned, this downward trending resistance line and this previous swing high on the 7th of July at 1 o'clock. Have the stop above there, so above the trend line and above this resistance line, as well as the Ichimoku cloud. If we drill down into the candle, it's a negative 4-hour candle, so getting short there. Looking to target a move down to just in front of 31,100. It's 3 to 1 risk reward as well, so not too shabby. Selling this at 34,300, stop at 35,300, targeting 31,300. There's a little 88 in there for the Chinese. I think they like the number 8, isn't it?
So yeah.
For all our Chinese followers out there, there's a lucky one for you.
Nice one, thanks, Steve.
What about you, Joe? What do you fancy?
I fancy selling the DAX today because purely just based on the last hour's candle, really. So I've got some resistance on the chart here that we've run into on the hourly chart. We've posted this big outside bearish candle over the last hour, and I just think there is potential there for a further slip to the downside. Pressure seems to be on the equity markets a little bit today. Obviously, overall, they are very strong. So just really looking for an intraday opportunity here. I've got 100 tick stop, which is a bit larger than I'd like, but safety wise, it's got to be above the high of this candle that we've just posted. And in terms of a target, looking for a swing back down to this region here at 15,306. So current price 15,648, stop loss 15,745. And again, that target is 15,306, 3.34 R looking for on the DAX today.
Nice one.
Indeed, not much going on the old calendar front today. There is a Eurogroup meeting at 11 o'clock, which is the highest impact event that is occurring today. So we'll wait and see if there's any commentary out of that. Other than that, pretty quiet to start the week. Earnings season starting this week, so we could see a little bit of volatility occur in some of the indices, particularly in the US indices. There'll be some big expectations, I would have thought, given that markets are up at all-time highs. So we'll wait and see if they can be backed up in the hard facts in the earnings reports.
Yeah, lovely.
Cool. Right. Have a great day, everybody. We'll be back tomorrow morning.
Cheers.
Bye-bye.